So what to do now? You'll get a syllabus on the site on Google Classroom only, and you will check the syllabus what you will study in these 3 months, in July, August and September. In these 3 months, what you will study, that I'll send on Google Classroom. You can check the syllabus. I hope it is there on the website. Okay, so you will check that, and accordingly you have to prepare yourself. You must have book and a fair copy, fair notebook for the studies. Okay, let me start with today's lecture, that is with the part B of your accountancy, cash flow statement. Okay, so let me start with cash flow statement. This is the last chapter of your part B. Last chapter of your part B, cash flow statement. It's important chapter because in board exams it carries 8 marks weightage. So first we go through the meaning of cash flow statement. What is cash flow statement? Cash flow statement highlights the inflow and outflow of cash and cash equivalent of the business. Cash flow statement is a statement of changes in the financial position of a business on the basis of cash. It is more useful for the short-term cash planning and short-term analysis of the business. So remember one thing, cash flow statement is a tool of analysis. We have learned the journal entries, ledger accounts, trial balance. We have learned the trading account, P&L account and balance sheet. And after balance sheet, the analysis starts. We have done the financial analysis with comparative and common size statement. We have done the analysis with ratio analysis. And now this is the last chapter of your book, part B. And this is the last analysis that you have to do in your syllabus, that is cash flow statement. Cash flow statement is actually prepared to find out the inflow and outflow of cash and cash equivalent. So cash, you know that whatever cash we have in hand and cash we have in our bank. But some other things we have that works like a cash. For example, checks, bank drafts, etc. It works like a cash. Okay, so they comes in cash equivalent. One more thing is coming in the cash equivalent, that is marketable securities. Marketable securities means the shares and debentures or security papers we have in our hand. So these are also known as the short-term instruments or short-term securities, which can be converted anytime when the market is open. Between 9:30 to 3:30 stock market is open. In between that time, the marketable securities can be sold out in a second, and we can get the cash. So the things which can be converted into cash will come in the cash equivalent. Okay, so cash and cash equivalent is what? Cash, what we have in our hand or in bank, and cash equivalent, what can be converted into cash easily. Cash flow statement is a statement of changes in financial position of the business on cash basis. It also depicts us a short-term position of the business. What is the change in the cash? Whatever the total receipts we got, whatever the total increase of cash we got throughout the year, plus whatever the cash we paid, we received cash, we paid cash. Through that inflow and outflow, whatever the net cash increase or decrease we got, that shows the cash flow statement. So we come to know about the financial position. If our net cash is increased, it means we have more of cash transactions, and definitely the creditors and the lenders will be happy when they see that we have a positive or increased cash flow. Increased cash flow will definitely give us a satisfaction that this company will be able to pay our cash in time. if we are the lender, investor, or the creditor of the company. Understand? It is more useful for the short-term cash planning and short-term analysis. Actually, cash flow statement is useful for the short-term analysis. It will not give you a long-term analysis, but it gives a short-term analysis. Now, the problem is we understand what is the cash flow statement. It is the checking of inflow and outflow of cash. But what is cash and cash equivalent is a question to understand. Cash equivalents are highly liquid assets or highly liquid investments which can be converted into cash within a very short period, not more than 3 months. So in a very short period, whenever we have some assets or investment which can be converted into cash, we'll consider as cash equivalent. Cash and banks are cash. We all know about that. But all the other assets and investments which can be converted into cash easily within a short span of time, that is of 3 months, then it will come in cash equivalent. It includes cash in hand, cash at bank, marketable securities, etc. Here one point is very important. As a note I have mentioned here, you can check. Unless specified otherwise, current investments are considered as marketable securities. If current investments are given and marketable securities are not given in your question, and there is no any other specification related to that, then current investments will be treated as marketable securities. This is a specified note for you because this may confuse you in the board exams. Coming to the next one, point to be remembered. Now, while you understand cash flow statement, there are some points to be remembered. Number one, cash flow statement is prepared according to Accounting Standard 3 revised. Let me clear you what accounting standard you studied in class 11th. There was a theory chapter, what do you mean by accounting standard? And there were 34 accounting standards were there in 11th standard, which you have checked in a list in your 11th standard accountancy book. In that list, first was the policy of the accounts that you are following. The second one was, the third one we are talking about, the third one was actually related to cash flow statement. According to the accounting standard, it is mandatory to all the companies to disclose their cash flow statement in their financial statement. While they are showing their financial statement, they have to show their cash flow statement also. And that is why you can check the annual report of any company on Google. You definitely get a P&L, balance sheet, and thereafter cash flow statement. These three things you will find there: balance sheet, statement of P&L, and cash flow statement. All companies has to disclose these three things. Why three things? Because cash flow statement is now mandatory to all the companies to disclose. Cash flow statement is prepared under Accounting Standard 3 revised, also known as AS3 revised. AS3 revised prescribes that cash flow statement be prepared either by direct method or indirect method. So the companies are showing indirect method usually. Usually the companies show a cash flow statement through indirect method, and you will also learn that indirect method. Although direct method is also there to prepare cash flow statement, but that method is not there in your syllabus, and very few companies follow that method. Okay, so indirect method is more suitable, more understandable, and more easy than direct method to show the cash flow position. And that is why most of the companies use a direct method, indirect method of preparing cash flow statement. Point to be remembered, cash flow statement shows three heads, namely cash flow from operating activity, cash flow from investing activity, cash flow from financing activity, These three activities are most important, and in your cash flow statement you must have these three activities. You must show all these three activities, whether you have inflow of cash or outflow of cash, that you have to show. For example, operating activity is what? It is the general activity of the business that the business has to do every day. It's a core activity of the business. For example, I am having a furniture business. Manufacturing of furniture, selling of furniture, both comes in operating activity because I'm having manufacturing business of furniture. So all the concern activities related to furniture is actually operating activity, and I will check in cash flow statement how much cash inflow was there through that and how much cash outflow was there through that. So usually inflow will be taking place when there is a sale of furniture, and outflow will be taking place when I purchase raw material, I purchase timbers, and then I just go for manufacturing of the timbers to furniture, and for that I am paying some wages to the workers. So these all comes in the outflow of cash. Inflow of cash, outflow of cash. We will get together the inflow of cash and outflow of cash, and then finally we find out that how much cash inflow or outflow is there in our operating activity. So definitely operating activity we are doing to earn more and more cash, more and more profit, and that is why operating activity usually shows a positive answer, means a cash inflow. On the other hand, investing activity, if we talk about investing activity is concerned with the amount which we are investing either in the securities or in some investment plans or in some growth projects or purchasing the assets. While we are purchasing assets or some growth plans, we are going to invest some amount that comes in investing activity. But if you check it, all these activities are concerned with outflow of cash. When we are purchasing assets, definitely it is outflow of cash. When we are investing, the amount into some growth projects, that also outflow of cash. How inflow of cash will take in place in investing activity? How inflow of cash taken place in investing activity? Inflow of cash taken place in investing activity. What happened? Inflow of cash taking place in investing activity when we are selling our when we are selling our investments, when we are selling our assets, then we receive money, and that will be called inflow of cash. So inflow of cash, outflow of cash, we will check in investing activity, and definitely most of the time we will find out that we have minus, means outflow of cash through investing activity. Why? Because in investing activity we used to purchase the assets or purchase the investment in which the cash outflow will take place. So investing activity usually shows outflow of cash. On the other hand, financing activity is arrangement of finance for short-term and long-term purposes by a business. Business always need money, and for getting that money we are searching out some resources through which we can get money, like through shares. When we issue shares we'll get money, or through by borrowings. When we borrow money from the uh, financial institutions, from banks as a loan, then we get money. So inflow of cash is there in financing activity, and financing activity is concerned with arrangement of fixed capital and working capital. Usually fixed capital comes in the financing activity, not working capital. Coming to the next, a note is there in cash flow statement. The CFS is cash flow statement. In CFS, these three activities are prepared on the basis of balance sheet and profit and loss. So we will talk about the indirect method only, not the direct method. So If we talk about indirect method, whatever cash flow statement we have to prepare it through financial statement, means balance sheet and profit and loss. Coming to the next slide, what is the objective of cash flow statement? Now we are preparing cash flow statement. What is the objective of this? The objective of cash flow statement is to determine the sources of cash, to determine the application of cash, and to determine the net change of cash. So cash, when I say, it means cash and cash equivalent in cash flow statement. If I'm going to pronounce cash, means cash and cash equivalent. While we are doing cash flow statement, cash means cash and cash equivalent. So what are the objectives of cash flow statement? There are three objectives of cash flow statement. Number one, determine the sources of cash. हमें कहाँ से cash receive हो रहा है, from where we are receiving cash and cash equivalent. And we will see this receipt with all three activities: operating, investing, and financing. The second one is application of cash. Application indicates the payments of cash through operating, investing, and financing. We will find out the payments of cash or applications of cash. Then the third one is the mixture of these two. How much source was there, how much application was there? We will check these two, difference between the two. And when we find out the net effect of the source and application, we find out whether we increase our cash or decrease our cash. We got the increase in cash or decrease in cash. Understand? So that will be called the net change of cash and cash equivalent. What is operating activity? Now here is a question that what is operating activity? What is operating activity? Operating activity, I told you that it is the general business activity for which we stand the business. Operating activity are the principal revenue producing activities of the company, generally result from the business transactions and the events that determines the net profit and loss. These are the principal revenue activities through which we find out our net profit or net loss during the year. For example, purchase and sale of goods and services by manufacturing and service industries. If we have a manufacturing industry, so what we are producing and selling, and if we have service industries, what we are buying and selling. So service industries में तो buying and selling आता नहीं है, whatever service we are providing. What is investing activity? Come to the point, what is investing activity? Investing activities are the acquisition and disposal of long-term assets and other investments not included in cash equivalent. Means investments included in cash equivalent also. I've told you that the current investment are treated as cash equivalent or marketable securities if unless otherwise no specified information is given in your question. So here this point I included that not included in cash equivalent. If any assets is there which is not included in cash equivalent will be considered as investing activity. So current investment will be considered as investing activity. Okay. Unless otherwise no information is given, it will be converted into marketable securities. For example, purchase and sale of fixed assets and long-term investments. We usually take these two into our investing activity. So when we purchase assets or investments, or when we sell assets or investments, it considered as our investing activity. And while doing our cash flow statement, we include all these activities into our investing activity column. Understand, I hope. The last one is financing activity. What is financing activity? Financing activities are the activities which result in change in size and composition of owner's fund. You know, the capital is one of the important issue in the business. Every time business requires cash, funds, capital for the growth and expansion. Not only that, but also to pay the day-to-day expenses. And that is why there are two types of requirement of capital: working capital and fixed capital. Fixed capital we require to buy the assets, and working capital we require to pay the day-to-day expenses. Working capital in cash flow statement is considered a part of operating activity, because working capital is having a direct impact on the operating activity. Like manufacturing concerns pay the day-to-day expenses for manufacturing the goods, so it is directly concerned with the operating activity, and that is why it is a part of operating activity. On the other hand, the long-term capital requirement or fixed capital requirement is considered in financing activity of your cash flow statement. Here it is given in the bracket: includes preferential capital in case of a company and borrowings of enterprise from other sources. So whatever capital we are arranging, although whether we have a partnership concern, whether we have a company, or we have any source of capital, like we are paying it from our own pocket, we are borrowing it from someone, we are borrowing it from some financial institutions, we are borrowing it from the banks, we are borrowing it by purchasing the securities, debentures. We used to issue the debentures to the public, and public will purchase it. और वी कैन डिमांड डिपॉजिट थ्रू द पब्लिक से भी हम डिमांड डिपॉजिट ले लेते हैं. समटाइम्स वी डायरेक्टली गेट द फंड्स थ्रू पब्लिक. We ask to the public, deposit the amount into our company and we'll give you an interest rate more than what you will get from bank. The public deposit that money to the company, and within a year they'll get 10% or 12% in interest instead of 6 or 7% interest through bank. So they'll get a benefit of 2 to 4% interest if they are depositing that amount to the company. So that is called public deposit. So borrowings, public deposit, issue of shares, issue of debentures, these are the sources of financing activity in cash flow statement. That's all for today's lecture. Let me recap of this. Maybe you have left something, so I'm going to recap all the things. Cash flow statement. First, I have explained you that what is the meaning of cash flow statement. Cash flow statement is highlighted the inflow and outflow of cash and cash equivalent in the business. It is calculated the net increase or decrease in the cash, and it shows a short-term analysis. What is cash and cash equivalent? Cash equivalents are highly liquid assets or highly liquid investments which can be converted into cash within a very short period of time, that is 3 months. It includes cash in hand, cash at bank, marketable securities, etc. Unless specified otherwise, current investments are considered as market securities. Point to be remember, I've explained you in point to be remember that cash flow statement we prepare through AS3 revised. Remember it. Most of the people, when we are talking about the cash flow statement, they used to ask this question: why we prepare cash flow statement and under what accounting standard we have to prepare cash flow statement. These two questions are very common. So remember it, cash flow statement is prepared under AS3 revised and it is mandatory for all the companies. Point to be remember, cash flow statement have 3 important activities: operating, investing and financing activity. And cash flow statement through indirect method we used to prepare, and through indirect method when we prepare cash flow statement we have to show all these 3 activities, and these 3 activities were taken out from balance sheet and profit and loss account. Objective of cash flow statements are 3 that I've explained you. First objective is to find out the sources or receipt of cash. Second objective is to find out the applications or payment of cash. And third objective is increase or decrease in cash and cash equivalent. The operating activity is concerned with the principal revenue resource or producing activities of the company through which they generate net profit or loss. Investing activity is concerned with acquisition of or disposal of long-term assets and other investments. Financing activity is concerned with the composition of or size of capital. I hope you understand all these slides carefully. This is all about today's lecture. We'll come back again at 8:30 for business studies. And the same students who are participating, who are attending this class, they have to be there in business class also. Okay? Thank you.